It's been over a decade since Disney decided to purchase Lucasfilm for over $4 billion. While the studio had some commercial success with movies like The Force Awakens and The Last Jedi, I guess, other movies and TV shows had limited success, to put it mildly. This raises the question, did the purchase of Lucasfilm pay off for Disney? After all, Disney and its shareholders expected a high return for such a sizable and risky investment. So let's break down how much Lucasfilm made for Disney via its movies, TV shows, experiences, and merchandise, and see how they fare to safer alternative investments Disney could have made at the time. The deal. Lucasfilm's purchase agreement was officially signed in October 2012 for $4.05 billion. The payment was made in cash and Disney stock, roughly half each. This deal allowed Disney to profit from Lucasfilm's existing IP, produce new movies and TV series, collect royalties and its merchandise, and TV and streaming deals, all while cross-promoting the IP through these channels. While paying upfront $4 billion for a company that owned a few movies seems risky, the IP included the most successful movies of all time and is still beloved by millions. I mean, what could go wrong?
Is there a problem, people?
To determine if the deal was lucrative, we need to evaluate how much cash the studio has made for Disney since 2012. Figuring out the profits of all possible ways Lucasfilm made money for Disney isn't straightforward, as most of the data isn't readily available. Disney doesn't divulge such information about its business, so for the most part, where the financial reports won't do, I will rely on industry estimates, some assumptions, and guesstimates. So this analysis should be taken with a grain of salt. While the studio will continue to generate additional income in the future, for example, from new movies and series, I will limit this calculation to the existing profits that the studio made for Disney till 2024. With these disclaimers out of the way, let's get started. So the roadmap. The main ways Lucasfilm could have generated money for Disney include new movies, home entertainment including TV, streaming deals, Blu-ray, DVDs, etc., TV series produced for Disney+, merchandise and licensing agreements, and theme parks. Let's start with the big ticket item, new movies. For the 6 movies Lucasfilm released since 2015, their total box office revenue was over $6.3 billion. For our analysis, we need to consider the profits that would require cutting out the share movie theaters take and then deduct the production and marketing costs. For the revenues, as a rule of thumb, studios only get half of the proceeds at the box office, and the other half goes to movie theaters. The production expenses for all these movies were estimated at over $2 billion. These estimates are mostly based on figures from Numbers, Box Office Mojo, and Forbes. We need to add the marketing costs to these numbers, which are harder to come by and will mostly rely on industry estimates and similar high-budget movies. After all these deductions, the initial figure of $6 billion shrinks dramatically.
Significant shrinkage!
To understand the calculations for these movies, let's take The Force Awakens as an example. It grossed at the box office over $2 billion. However, Disney only received $1 billion after deducting the share theater takes. The movie production budget was estimated at $447 million, which includes tax breaks from the UK. For such a high-profile movie, the marketing is assumed to be around $175 million, which is also the industry guesstimate and relies on similar mega blockbusters at the time. Deducting these costs bring the operating earnings to $413 million, or nearly 41% of operating profit. A good start for a new franchise. Well, at least at the time it was. In the same way, I calculated the operating profit or loss for each movie. While all 6 movies brought over $3.16 billion to the studio, the last 3 movies' week's performance led to losses. In total, the operating earnings for all 6 movies were only $116 million, a profit margin of 3.7% against the net revenue. So the movie segment is already shaping up to be a dud. Home entertainment. After a movie's theatrical release, it can still generate revenue from DVDs, Blu-rays, at least at the time, licensing agreements with network television and streaming services like Netflix, at least before Disney+. Moreover, the existing IP such as the prequels, original series, the Indiana Jones series are likely to still be viewed and generate income for the studio. Here, there is no good data, so we must make educated guesses that could be way off, so it should be taken with a healthy dose of salt. I assume that since 2013, the existing IP has made around $50 million a year, with an annual growth of 5%. For the new movies that came out, assume that each generated an additional profit of 10% of the gross box office outlays in the first year if the film was profitable, like The Force Awakens, and 5% for those that didn't turn a profit, like the new Indiana Jones movie. Then, in the subsequent years, each movie made an additional 2% of the box office revenue as profit, which diminished by an additional 10% each year. For example, let's consider The Force Awakens again. As the chart shows, the stream of income falls off the cliff after the first year, and by the end of 2024, the movie made an additional $334 million. Based on these assumptions, I calculated the earnings of all movies from home entertainment, which yields an additional $1.6 billion. To make sure the calculation isn't way off, I also looked at the money Disney reported from home entertainment and TV VOD licensing agreements. The share of Lucasfilm, based on my calculation, relative to these segments' operating profits, come to around 7.5%, which seems like a reasonable percentage. Next, TV series. Disney Plus started streaming on November 2019, and since then, till 2024, Disney has released 7 series related to Lucasfilm. Only The Mandalorian had 3 seasons, the rest only had 1. While the budget for each series is available online based on industry estimates, the hard part will be figuring out how much each series made. Since Disney, again, doesn't disclose how much each series generated, we must develop a more creative way to guesstimate these figures. Disney discloses in its financial reports the number of subscribers and revenue from Disney Plus, so we can start with that. Let's assume each subscriber started watching Disney in 2020 with an average of 5 hours a month and a growing pace of an additional hour per year till it reaches 9 hours a month by 2024. From this, we can estimate the number of hours viewed that could be used to figure out the revenue each series made for Disney. Again, let's use an example with The Mandalorian Season 2. Based on the reported estimates online, the show's initial run was viewed in the US over 8.38 billion minutes, or nearly 140 million hours. Assuming the number of international paying consumers equals the number of consumers in the US, we can add another 140 million viewing hours for the international audience, bringing the total viewing time to 280 million. In 2020, based on our assumptions of viewing per subscriber and the total number of subs that year, the number of hours viewed on Disney Plus was 4.4 billion. So the share of viewing hours for The Mandalorian Season 2 was roughly 6.3% of the total viewing time in Disney Plus. Now, the streaming service made Disney $4.2 billion in 2020. If we assume the viewing percentage is equal to the revenue generated, in this case, The Mandalorian Season 2 is responsible for 6.3% of the total revenue from Disney Plus, which comes to $268 million in 2020. Let's also assume that the series generated an additional 50% of its initial revenue in reruns, and we get a total of $402 million. Again, these are very rough assumptions that don't capture how popular one show could be, and perhaps is the main driving force behind Disney Plus subgrowth. Not all shows are born equal, and some could even carry a streaming service like Game of Thrones was for HBO. This is just one point among many other nuances that these assumptions gloss over, but I think this method provides a rough ballpark measure for our purposes. So The Mandalorian Season 2 made over $400 million against a reported budget of $120 million. These figures indicate the show made an operating profit of $282 million. In the same way, I calculated the profits or losses for other series. As seen, The Mandalorian was the most viewed and profitable series, while Andor and Willow were the least, as they lost money for Disney due to their high production cost and low viewing time. In sum, the TV series generated $605 million in profits for Disney. Merchandise. This segment includes toys, costume, t-shirts, and pretty much anything Disney thought of making a product and slapping its IP on it to triple its price. Indeed, this segment is among the most profitable for Disney. Its annual revenue from merchandise and licensing has been steady at an average of $4.7 billion a year in the past decade, with a profit margin of 47% last year alone. One of the main ways Disney made money is by selling merchandise directly or through licensing agreements like the one it has with Hasbro and Lego. While Star Wars is a juggernaut in merchandise, Disney has many IPs, which means that Lucasfilm movies would only take a small margin from the total operating profit. So for this calculation, I will assume that 5% of the earnings from the merchandise is due to Lucasfilm franchises. Since Disney reports how much it made annually from merchandise, we can simply deduce, based on our assumptions, that the Lucasfilm IP brought in steady income of close to $100 million annually for a total of $1.1 billion. Parks. Disney introduced Star Wars rides in the late 80s, and it was rumored that Lucas was paid $1 million per year per ride in his first licensing deal with the then CEO of Disney, Michael Eisner. Since then, a lot has changed, and Disney has built many Star Wars and Indiana Jones rides in its parks worldwide. Here too, it's a bit challenging to distinguish how the Lucasfilm's IP made money for Disney, but let's give it a shot. Of all of Disney's parks, 4 have Star Wars or Indiana Jones related experiences or rides. In the US, Disney provides information on the domestic revenue and profits from parks and experiences in its financial reports, but doesn't specify based on each park, which is essential considering not all parks have anything to do with Lucasfilm's IP like Epcot, Magic Kingdom, and Animal Kingdom. So we'll have to make a rough estimate. Based on the numbers of tourists that arrive, and assuming the income per visitor is the same across all parks, I know, a very simplifying assumption, roughly a third of the visitors in recent years arrive at parks that have Lucasfilm rides or experiences. So I'll only consider a third of the total income Disney reported in the US for this estimation. Now, recall that Disney operated Lucas's IP-based experiences and rides long before Lucasfilm was purchased. Hence, we need to figure out how much Disney would have paid Lucas and consider that as the added profit for Disney from this investment. I think 5% of the profit seems a reasonable assumption. As such, this brings the total operating profit from Lucasfilm's IP rides to roughly $615 million in the US parks alone from 2013 to 2024. What is left is to include Euro Disney and Tokyo Disneyland for the international parks. For Tokyo, Disney doesn't operate the theme park, but instead collects royalties from Oriental Land Company, OLC. So for this theme park, we have financial statements. According to some reports, Disney receives a 7.5% royalty from the company's revenue in Tokyo Disneyland. And here too, I will assume that Star Wars account for 5% of this theme park's revenue, bringing the total income from Lucasfilm's IP to around $172 million. For Euro Disney, there are no financial reports, so I'll just have to guess. Based on the number of visitors, which is roughly 60% of that in Tokyo, I use its profits to guess that Star Wars IP in Euro Disney brought in also 60%, for a total of $104 million. Summing everything up brings the total income to $891 million. So after making all these calculations, where does it leave us? To tally, the movies added $116 million, TV series $605, merchandise and licensing $1.16 billion, home entertainment a whopping $1.65 billion, and parks gained $892 million in profits. Combining these figures bring the total operating profit to $4.4 billion. The pie chart shows that home entertainment and merchandise accounted for over 60% of these profits. Let's also deduct from these profits another 10% for indirect costs like management, interest payments, etc. And the total cash flow pre-tax would be around $4 billion. Cumulative return on investment or ROI of 98%. In other words, after 13 years, the initial investment was barely covered. Moreover, the annual ROI was less than 6%. At first glance, these figures may seem reasonable. However, we must remember that this investment was very risky, even with well-established franchises, as the recent movies bombed at the box office have shown. While investment of $4 billion in 2012 may seem insignificant for a company like Disney with a market cap of over $100 billion at the time, it was still a sizable investment to which Disney shareholders would have liked to receive a high return for the risk the company took. To understand how this investment fared to other less risky ones Disney could have made, I looked at an alternative. Recall that the original deal was financed with $2 billion of Disney's stocks and $2 billion in cash. So let's look at what would have happened if Disney had kept those $2 billion worth of its own shares and invested its cash in a simple 60-40 portfolio that comprises 60% of the S&P 500, the main US stock index, and 40% in US T-bills. The plot shows the changes in investment over time in billions of dollars. While the stock investment fluctuated much more, especially around 2020 due to the pandemic, the overall performance of this portfolio shows it had outperformed Lucasfilm by over $1 billion. And the cumulative return on investment would have been 126% by 2024 with an annual return of 7%. So a no-brainer investment like Disney keeping its own stocks and putting some cash in a 60-40 balanced portfolio would have made Disney an additional $1 billion compared to Lucasfilm. While these calculations should be taken with a grain of salt for many assumptions and second-hand data they relied on, they still paint a picture that isn't too flattering. These calculations could be off by a few tens or even hundreds of millions. However, even so, there would still not be enough to justify such a risky investment with a meager 6% annual ROI. That doesn't even beat a less risky investment. Conclusion. Disney profited from Lucasfilm, but these earnings barely cover its initial investment after 13 years, and they aren't much compared to other less risky and easy to implement investments. And sure, there's still potential for upside in the future with the selling of new merchandise, royalty deals, movies and TV shows, and new experiences. But the recent failures in the box office may have also harmed the reputation of Lucasfilm and Disney, something that has a dollar amount, albeit it's even harder to quantify. These figures highlight the main problem with this investment. It wasn't the price tag as much as the execution. Indeed, Lucasfilm could have been a viable profit center, as it seems it would be, at least initially, when The Force Awakens came out. Despite the movie's many flaws, it made more than enough money to show Lucasfilm could produce major blockbusters. Alas, at this point, a significant course correction would be required for the studio to start producing mega blockbusters that would justify the initial investment made back in 2012.